Okay, good morning, everybody. Welcome to another Engineering the Markets. My name is Jared, and it is August 18th, 2022. Happy Thursday to everybody. Hopefully you've been enjoying this week of trade. And while it is Thursday, we're kind of wrapping up Engineering the Market for the week. I wanted to go into a little bit of a historical review, mostly to talk about some of the more active participants in the market who are making certain actions to protect or basically forecast future market downside or potentially more instability in the next couple of cycles throughout the market. And as we are using a lot of technical analysis and overall historical review to find how these things line up, what are some similarities, what are some differences, I figured going back to one of the more classic and historical bear markets, the 07-08 financial crisis in the housing sector, we're also going to be looking at those structures and seeing if we see differences or potentially some very risky similarities, ones that those market participants may be responding to and we should take heed of in regards to our trade. So what I have shown is the S&P 500 ETF on two separate time frames. On my right-hand side, we do have the current S&P time frame just aggregated over daily candles and looking back 1 year. This is pretty much our normal view of the S&P from a daily perspective. On my, I guess I'm switching actually sides, sorry. So on my right-hand side is 07-08. On my left-hand side is the current time. So on the right-hand side, I've gone ahead and isolated about 1.5 years of price activity for the S&P starting at the beginning of 2007. I'm not necessarily showing all of this data simply because for those maybe unfamiliar with this time frame, I don't want to ruin the surprise. So for now, we're going to keep it on this time. And maybe those who know about this period will know what the next set of reactions happens to be in the S&P. So what are some things that we notice as humans and as pattern recognition machines? What are we able to spot as similar moves in the overall market structure during this time? Let me grab my Epic pen to make sure we're all looking at the same areas. So prior to this period, the S&P was in a overall recovery bull market. The reason being is about 7 years prior or 6 years prior, we had bottomed out after another bear market, and that was of course the tech bubble or the overall .com crash across the NASDAQ and certainly affecting the S&P at the time. So the S&P was coming off of that relative low. We were also starting to test the previous all-time highs from that 2000-2001 period. That particular time frame, price and earnings, basically your overall cost per future earnings and future growth, was very elevated. So the S&P was starting to reassess that valuation, albeit some of the underlying companies had changed. The overall earnings per price were a bit less concerning at that period. And as long as the overall economy stayed healthy and relatively stable, the S&P had a chance to continue on its bull move during that time. So there was certainly optimism. The market condition was overall elated to see a lot of that recovery in price. And a lot of people were looking towards the future. They were seeing another secular bull run starting to come, as certain asset classes were outperforming, and we were getting a lot of very bullish sentiment across the economy. Now, as technical traders, let's take a look at some similar structures here. For one, let's call out the overall all-time high during 07-08. So we're looking at approximately 157 S&P. Comparing that, of course, to our current all-time high at approximately 480 S&P. So obviously, we're going to be looking at more percentage drawdown, not necessarily price similarities, but those percentages should reflect themselves as certain waves and structure in the market. Very important to note the volatility and some of the structural changes that are going on during this time. So we'll assume that the all-time highs kind of start this analysis. I will call out the fact that there was a period of volatility approximately lasting about a month and a half during 07. And this was more of a massive shift in some of the economic policy that was taking place. Market was responding to that new bit of information, and there was a lot of back and forth volatility for investors to deal with. You'll also notice that this was the first real break of the 200 period on the daily. Sorry, my pen got lost there. 200 period on the daily, which we also saw during our all-time high retracement. But this one, of course, is structured a little different. Markets are never quite exactly the same. And what you could argue is this period of volatility led to a V reversal before actually starting a true downtrend, one that has the characteristics you would expect, making lower highs and lower lows. One could say that this period here might have some similarities, but we obviously did not draw down to the 200-day. Therefore, differences and similarities are going to be there. You want to just kind of assume the same overall patterns, but not necessarily the same downside or upside. So different targets, similar structure. Now, as we start to top out in the S&Ps, and this is basically speaking to both time frames, you'll notice a couple of key areas in the market that are important relative to changes overall. First and foremost, you'd want to notice what happens as we start to draw down from the all-time highs. Once we get structural cracks in our moving averages, things start to get a little bit more challenging to interpret. You'll have things like downtrends that occur and have very clear breakouts. But in this case, that breakout certainly retraced in the future. This is not dissimilar to what happened in 07. As we started to end that particular trading year, there was a very clear downtrend on the daily time frame, lower highs and lower lows, and we had a clear breakout. So some similarities in regards to our first wave of selling. Ultimately coming in below the 200-day, just kind of marking relative areas of interest, and then responding. So what's interesting about these drawdowns, they also have somewhat similar percentage drawdowns. So I'll take this back a little bit and redraw. So our current high to low drawdown basically coming either into January, which is about 12% from the all-time highs, or you could argue near the swing low before the breakout. And that's somewhere around this reactionary low based around some news regarding the Russia-Ukraine conflict. this was approximately 14% in the S&P, anywhere from 13 to 14%. So that first wave of selling had the characteristics of a correction, about 10 to 12% drawdown in your overall index product. Is that similar to what we saw back in our first correction throughout 07, 08? Yes, the drawdown here is right around 10%, so it fits the mold of being classified as a market correction. And like most market corrections, there's usually a period of uncertainty, a little bit of anxiety as people are seeing more of their basically total investments coming down and off of an elevated position. And markets start to wonder, okay, is this a period of opportunity back to the upside, along with what's the risk? You know, is this a risk that's going to be longer term, and is that risk something that we'll have to overcome before the market can truly recover back into a more bullish stance? So during that time, you'll notice some short-term volatility, and you want to call this out more so to understand how to trade during these periods, because like most areas of the market, there are periods of almost pure bullishness and periods of almost pure bearishness, but there's also periods of high to low or some sort of mid-range trading that has to be addressed. And this is something very important to call out, because usually after big moves, you have to expect some sort of back and forth trading. And that's where you want to be careful holding pure bullish or pure bearish trade positions. You want to lock in those gains, not because the market can't go higher. It's because the market is more likely to enter into another period where you can analyze and set up new trades. And that's really the difference. You're freeing up buying power and the ability to trade for the next opportunity, not necessarily holding for the absolute highest price that you can get. Targets are targets, and they're meant to be basically addressed. So as we enter into this phase here, one thing you'll notice is you'll start to get the ability to draw a new trend line. You know, beforehand, the S&P had this relative trend line. We broke out. We started to top out and change the structure near the highs, just starting to make your first lower lows after a lower high. And the period here is a bit hard to read because we're not necessarily in a fully weakened position, but we're also coming off of a buy swing. So the market is ascertaining whether or not this is a new buying dip. Is the market looking to make a new wave higher? And therefore, is this a bargain price for the market? You'll notice that similar period here as we break out, we form the top end of our trend line, and then we start to pull back in. There's basically a high to low range approximately at these levels before any side of the market is truly chosen. So those similarities are very classic in regards to the first sell swing of a potential bear market. And during this time, people were a little bit unsure if we were truly in a bear market. They were saying, hey, this is just a correction. It tends to be buyable. And if it is a correction, you get a discount in regards to future investment opportunity. But of course, as we sell off lower, people start to realize and recognize that this correction is going to be a bit deeper. Now, here's where some more differences start to form. I will just kind of call them out as they are transitioning over time. But as the market is entering into the 08 year, and as we have entered into approximately mid-April, you'll notice a characteristic that started one of the deeper sell swings and probably the most opportunistic downside moves that we've had so far. First, you'll want to note where the selling really got anchored to, in regards to not necessarily selling into strength, but noticing that something has failed and the market is very unlikely to do a higher low transition. Instead, we're now at risk of testing lows and also possibly breaking down. And that was observed very clearly once we had our rough April highs. You can kind of observe this on a monthly time frame. Even though this overextension here did have resistance, this is still an aggressive short entry because the market is coming off of a period of fear and uncertainty. Seeing that recovery can be hard to short, it can also be very hard to time. So markets can pull in, simply form lower high structures, and then of course the follow through with regards to what is the risk of the market. And of course, risk changes. S&Ps are more concerned with inflation and economic conditions. Back in 07-08, we were starting to see the beginnings of the subprime crisis start to evolve as we were getting major investment bank institutions and basically insurance companies either starting to struggle or even go under. Some of the early signs of this were occurring. And definitely we were seeing some very clear economic underlying risk, structural risk, no, systematic risk. I couldn't remember the word. So similar periods once again, but we're kind of looking at our waves here. And what we notice here is that these rejections have occurred at very similar moving averages. You're going to notice a lot of noise when it comes to the 20 and the 50, the green and blue moving averages respectively. They're curling down, but they're noisy. They're going to have some periods of minor uptrends and of course realigning into downtrends once longer term moving averages catch it up. And what I wanted to observe here is the 200 was a very key moving average to set up this next sell swing. Markets corrected from this again. We've obviously experienced that very recently, so this should be no surprise to anyone. But let's say we're measuring from this lower high. You'll notice a bit more similarity than measuring necessarily from the anchored trend line or the sort of breakout and recovery move. But we can measure there as well just to kind of showcase both, and that you'll see some differences here. So for now, let's look at the full extension. And it's notable here because even though I'm measuring from a lower high, the market still corrected about 20%. And this is, of course, from mid-April to about mid-June. Lots of uncertainty. People are seeing the risk of inflation. They're also seeing a Fed monetary policy starting to shift and change, be a lot more reactionary, and that provides additional fear, uncertainty, probabilistic risk. We're always monitoring that on our current timeframes. But the market drew down another 20% before hitting an absolute relative low that we're still trading inside, and we'll talk about that level very soon. The drawdown from the swing high is even more notable. It's obviously a more elevated period, and therefore this drawdown is coming into about 21%. So, notable here that even just from measuring from weekly lower highs or the daily lower high pivot, the market still corrected approximately a bear market correction size. This is not even from the all-time high. By this point, we were looking at an all-time high drawdown of approximately 24 to 25%. So that's basically our current downside correction so far. And once again, we can notice a couple of interesting structures in between. There are periods of technical chop and balance in regards to new events or events at the time that markets are preparing for. Just like we had these ranges on the way down, boxes of high to low, balance ranges that we've been trading through, and then of course some of the sharpest selling near the low end. Usually markets can actually be the worst, or basically have the fastest downside near the lows. Crashes can occur from oversold conditions is kind of the idea, because if everybody's looking near the lows and starting to apply leverage, that leverage can unwind very quickly, along with any last holders who are once again typically over leveraged and people wanting to sell into fear. Now we see that characteristic here as well. Maybe not the same balance ranges, and certainly we have a low end here where the market actually double bottomed. You could argue that this double bottom did break out in the future, but overall this area has some differences. In regards to technicals, there's larger sell swings. There's probably a bit more volatility during that time. You want to be thinking in percentages based on that time frame. But you also want to look and see, does the drawdown match? So once again, anchored more from the 200 period, our low was actually less. Percentage wise, we didn't actually drop the quote unquote bear market percentage of about 20% from a lower high scenario. Now, did we drop 20% from the all-time high, and was the market technically considered a bear market? The answer is yes. For those unfamiliar, by this point in time, the S&P had just breached into a 20% correction. So the market actually entered into that phase near a relative bottom. Very interesting low, because it's maximum fear during that time. It tends to be one of the highest volatility moments, and therefore provided the best risk to reward when the market started to bounce. So it's amazing to see these characteristics on markets overall, or just equities overall, along with any time we're looking at other technical names. The markets tend to respond very similarly. So obviously that's a difference. The drawdown percentage is not as high from our current all-time highs, but along with those differences, there are some similarities with our anchor, our moving average that rejected, and ultimately some of the downside risk that we were experiencing as the market was trying to now deal with an economic crisis during 07-08. And as we were entering our lows, we were seeing peak inflation, basically the highest readings that we had experienced, which actually ended into the best price for the S&P at this time. So what allowed us to now break out from this? Well, we've got a little bit of economic cooling in regards to Fed potentially pivoting. We also had some of those elevated readings start to back off. So you get markets starting to claim that everything is good. Danger is over. Basically, we've seen the top of inflation. Therefore, that risk is no longer present in the market. And the markets can do what they often do, which is recover and go through a low to high transition. Very similar to here, we were seeing potential resolution in regards to some of these systematic risks and closures inside of, once again, the subprime crisis. I won't go into that detail too much. Some of that was starting to be resolved, and the market assumed that the systematic risk was not as deep as people had forecasted. Certain insurance agencies were starting to look at ways to adjust their risk model. They were also seeing potential short-term pullbacks in mortgage foreclosure and just overall the health of the current risk. So markets speculate. They start to return back into a phase of potential bullishness. Move this back into this. And what you'll notice is there was a previous trend line, one that is very similar to what we have today. The market actually moved from its lows, once again, slightly different low with a double bottom, but you have this noisy area of the market, a lot more volatility. You have a very clear sort of breakout area, albeit there was a trend line break much sooner. And similar to what we have today, we have trend line breaks and a little bit of back testing. So similarities and differences. Now we move into certain trends, certain supports. Do you need to get in? Okay, I'll be right back. Give me 1 second. I didn't know you had a key. Okay. All right, sorry about that. So markets go through a recovery phase. Once again, just to kind of round out this portion, you want to be looking at your recovery percentages. Markets can easily recover from lows, similar percentages to drawdown highs. So in this case, we have a market corrected approximately 20% from a pivot. The market is easily now recovering into another 20% upside. And this is where people can start to once again get FOMO, get bullish, and ultimately look at the market as going to continue higher. Is that similar to 07, 08? Similar, not quite the same. Percentage recovery was a little different. It's also notable that the drawdown from our pivot was about 15%. So 15 down, 15 up doesn't mean that you're back at the same price. Percentage performance is very tricky in that way. Now, last piece as we kind of round out. Obviously, there's a period here where we're currently in. Period of possible move away and rejection. We're looking at the 200-day, and we're also looking at the trend line. You want to compare this to similarities back in this time, because there are market participants who are calling out the structure and saying, hey, this is where the maximum risk for the market was existing in regards to 07, 08. And they're simply using similar concepts here because drawdowns, structures, and overall waves have been quite similar so far. But the reason why we're calling this out now is to be extremely cautious, because just like we saw in 07, 08, the market unfortunately had its relative top on its correction wave into these levels. It did break trend slightly, but ultimately came back in and formed a head and shoulder structure on the daily time frame. Now, hopefully this is not a surprise to too many people. But what does the next wave of the market look like? Well, it looks like this. And this is what a lot of people are starting to prepare for the potential of the market doing, is having it reject and coming in not to a similar degree as we've seen, but having a full economic meltdown or crisis on our hands. Something that takes typically a full year of recession or some sort of depressionary period in order for the market to climb back outside, to see a full cycle from high to low in the economy. This is what people are looking for. And obviously anyone who is selling is afraid of this risk. So I'm not going to go into too much of this currently because it's still comparing something that hasn't happened to what could happen, but it's why we're going to be extremely cautious in these areas, because the market can struggle, the market can draw down and retest, and ultimately we could see future risk that could even break our current swing lows. So you want to think about those percentage drawdowns and the idea of trading through some of those scenarios, if any occur during price activity. So with all that said, I'm going to go ahead and call it here. Ran out of time today, but look at these similarities. And if you're starting to hear it in regards to certain reactions, this is mostly what is being compared from a technical sense. Additionally, thank you for joining today. Stay tuned for pre-market prep, and we'll talk more next week. Have a great Thursday and Friday trading session.
All right. Good morning, everyone. Welcome to the PreMarket Prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible day yesterday. Good morning, Norm. How you doing today?
Hey, good morning, brother. I am doing well. How are you?
Doing good, man. Doing good. Can't complain. All right, guys, let's get to it. Our gappers list this morning got a little bit on both sides of the field here, a little bit in the red, more in the green side of things here. A couple of tickers we haven't seen in a while or at all. And our, also, of course, our usual suspects. I think a couple of earnings too. I think BJ's. Only time we
Yep,
see BJ's on this list is earnings. So, uh,
that is
uh,
absolutely true.
yeah, 9 times out of 10, if you see BJ's on the gapping up or down, you can bet that it's earnings. So, um, all good here. And then on the gap down, a lot of low flow stocks. We had a lot of low flow stocks ripping yesterday. Looks like they're all down today, including the elephant in the room, BBBY, down about 12.1. So let's see. A lot of fun going on with these meme stocks. Again, they're definitely making the day trading entertaining. All right, let's get to some of the stuff we had yesterday. Yesterday overall, though, was not the easiest day. So if you struggled yesterday, you were not alone here. If you look at BBBY, this was again a tough open. Had a great pre-market activity, ran up all the way to 30, and after that, it was just struggled pretty much sideways the entire day. Couple of pops here and there, and then the major drop after hours with some news breaking out there. Today they're active again, guys. They're down 12.58 million shares traded. We'll see where that goes there. We have shares for sure. Interesting. Let's see. 200,000. That is almost nothing. That will be, could be gone by the time we get to it. Also, keep in mind this thing doesn't update right away, so it's not 200,000. It could be more or less right now. In some cases, I've seen some traders that we were talking about this in the chat room yesterday, where it might not show stocks available, and if you hit your hotkey, whatever, and you send the order in, you
Sometimes it'll
still
go.
might get filled, right? Because it is
Yeah,
updating live on the broker side. It's not going to update live on your platform. So some people, if you send 500 shares, you might get filled. So if you're really
I think
convinced
it's
about
like
the
every
moves,
5 minutes.
yeah, right. If you're convinced about the move and you want to give it a shot, try it. I've seen Andrew get in plenty of times in situations like that. So, all right. So BBBY guys, again, not great plug. Also, again, just a lot of sideways action yesterday. It was not a clean day. We definitely seen better. We have Apple here, which had an initial pop that was very nice, actually, very nice here. Good continuation, and then just sideways for the entire mid morning into about 1 o'clock or so. You got the next run breaking the high of the day all the way to 176.25. So, but again, not a tough, not an easy trade yesterday. AMD sold off pretty nice yesterday. So you had a little indecision first couple of minutes, sold off all the way down to 96.80, then found then just kind of hung out here for a couple of hours until finally around 1 o'clock, you got a little bit of a bounce here. Back trying to get towards the high of the day. I didn't look at Amazon. What did Amazon do? Okay, so Amazon, pretty much the same as AMD. Not really anything different here, right? The drop here, sideways for a couple of hours, and then the pop here on 130 or so. So, all right, that is what we had, guys. And also, of course, you had the meme stocks like Fubu and GameStop all active yesterday with volume. So, with that said, let's go to our market pulse and kind of what's going on there.
Yeah. Well, as I mentioned, the big news of the week was the data that came out 2 o'clock Eastern yesterday. That was the FOMC minutes detailing their conversations during their last rate policy meeting. They said some things, although not super definitive, and that closed a little bit lower yesterday on the in the markets overall. They talked about being data dependent and not on a set rate hiking schedule. They're still fighting inflation. We'll see how that pans out over the next 2 days. It'll be interesting to see. This morning, I mean, we're essentially flat. I think people are sitting on their hands a little bit. We did just have initial jobless claims and continuing claims come out. Both came in roughly in line with what was expected. Philly Fed manufacturing came in better than expected. 10 a.m. we get existing home sales and some leading economic indicators. Then we have the Kansas City Fed president speaking at 1:20, and Neil Kashkari, the Minneapolis Fed president, speaking at 1:45 this afternoon. So it'll be interesting to see what they say, if they shed any light on those conversations that took place in the meetings. Um, I think it'll take a little bit to see, you know, Jared spoke about this, you know, the overall market in depth. So I won't go too much further, but, you know, people are waiting to see, is this a bear market rally that we're going to have maybe a precipitous bounce from, as has happened if you look at other bear markets in the past? I mean, take the big one that we're all aware of, you know, in the late 2000s, 2008, the financial crisis, and we had some pretty good rallies that came back pretty strong and then just collapsed. So
Yeah.
Pins and needles right now. We'll see.
Yeah, definitely important
Either way,
information.
we can make money either way, though. That's the key.
Yeah, that's the thing. That's a great thing about day trading. All right, guys, let's get to it. Let's go ahead and remove our list here. Control A, Control X gets rid of that. So we'll be looking at our watch list and seeing what we have going on here. Meadowman says he tried to short BBY yesterday. His trading platform said unable to short. If you're trading with IB and you try to short something, you get an email like a week later. It's a couple of days later. It says, "Hey, we have your inventory for short." And I'm like,
thanks.
yeah, I don't need it now. Thank you. The party is over.
And they keep sending it to you for a couple of days.
Yeah,
too.
for a couple of days, like 3. They just keep sending. I'm like, dude, what are you guys doing?
Mm-hmm.
So it's interesting how they do that. But here it is, guys. Let's start with Wolf. Wolf this morning. We'll look at the top 5. We got plenty on here, but we will not go through everything. Wolf is up 20% this morning. Horrible pre-market activity, and the reason for that, the volume is extremely light, only 130,000, and it's all over the place. It's not a consolidated, nicely traded 130,000. Normally the stock, the volume on the daily extremely light, so we don't like to see that. Even on days where it moves, you know, you're barely getting to 2 million, 3 million shares. Norm, anything on this one that's worth mentioning?
I mean, they had earnings last night, and this is a chip manufacturer based in the U.S. that talk about expansion and positive stuff coming out of the CHIPS Act that was just passed. That having been said, it would need a lot more volume for today to have any interest for me. It is a NYSE stock, so the pre-market action isn't too surprising for me. I mean, it's at the very best, maybe.
Yeah.
Like, if nobody else will date me, maybe I'll take you out. Maybe I'd rather sit at home by myself.
Yeah. Agreed. So let's move on down to the next one. One of our good buddies here, FRZA. FRZA this
you
morning.
can be good buddies.
Electric boat here is up 11.4 right now, 180 and 836,000. So onshore selling restriction. This thing's just gapping up or down. I don't think it's trading well though. I haven't looked at it. Yesterday was messy, and I expect this to continue. So just be careful if you're going to be trading this one here. IPOs lately seem to just get really active for no reason.
I could make another dating reference to this, but I'd probably be reported for being misogynistic and kicked off YouTube. No, this is, I refer to this, and I tweeted earlier, this is the Ugly Boat Company. They have a distribution agreement that they announced, something like a distribution agreement. We'll see.
Yeah, it's funny how I noticed that, and not all of them, but some of these IPOs, they IPO, and then immediately, like a few days later, there's some kind of catalyst that's released, right? I forgot the one that did that to it, and it popped up from like $8, from $4 to like 20, and it's like, is that the new thing now? You know, IPO and then come out with a big catalyst to get things going. Man, it's just weird. But I've seen that twice already in a short period of time. Here's BJ's. BJ's again up 7%, 163,000. Again, only see them when they are in earnings play. Obviously, the good earnings up 7%. I just, again, trading this thing is brutal. Very light volume. I'm not a fan of it. If anything, this would be a good opportunity for a short to kind of close this gap. That's the only thing I would be looking for.
They had blowout earnings. Yeah, as you said, they had earnings. They had blowout earnings. This is one I definitely won't be making a dating joke about.
Yeah. So maybe maybe today they can prove us wrong. But again, it's even with that, their trading activity is not great. Here is Blue. This is Bluebird, and they are up 7%, 2.4 million shares traded. Looks messy here. This pre-market action. I'm not enjoying this as much as I would like. So let's move on down. High short flow interest at 28% on trade ideas right now. So maybe that could mean something, but for the most part, selling down right now. If it comes back down below 7, it's not really anything that we will be looking forward to there. ENVB, this one, man, pre-market access not looking great, very light on volume. The float on this is 1 million shares. So off the top, that type of float, we need to see way more volume in the pre-market, better trading activity. We're not seeing that. This thing has been a runner in the past, going from 6 to 15. It looks nice. Man, the scary part about this, if I zoom in a little bit more, it did this with 6 million shares. So that's not good. If you look at that, it's probably a couple of holds, and it's just not great. So, but that's what you're gonna get when the flow is 1 million, right? So be very, very careful. CSCO this morning, they're up 5%. It's again looking good. Another company that can gap up here and there, but their trading is just brutal. So obviously earnings great last night on this one, Norm.
Yeah, they had earnings last night, correct?
Possible. I mean, that's probably the best I can do for these guys. We'll see if we get. We'll see. I mean, I like the gap up this morning, but they're just not great as far as trading. IonQ
You're
had a
selecting your list like a grumpy old man today.
yeah. I'm being very picky today, man. I'm being very, very picky, and going down this list, I might end up with nothing on my main list today. If I keep going like this, I'm about to ease up a little bit. Here's an IonQ. IonQ, IonQ this morning up 3.8, 470,000. Nice gap up on a couple of days ago. What's this? Tuesday, whatever, and it did well. I actually did not expect for it to move that well like it did. I thought it was going to be a lot more choppier. But we'll see. Secondary, third day here of trading. I'm not sure what to expect. I like the fact that they're holding, that it did not sell down. That's always a good sign. Let's see what happens on 4%.
They did announce this
471.
morning a some agreement with Airbus. So
Oh, that could be good. That could be good. Let's see if that means anything. I mean,
Maybe.
again, I like this. I like the way
it's
it's set up
something
here.
at least.
This definitely surprised me. This I thought it was not going to trade that clean, so that's good. SAVH's been making some noise here. So this morning they're up 3.8. And actually, this is one yesterday that I kind of dismissed, took off my list. Man, was I wrong? Look at this. I mean, how can you not take this off your list when you're seeing this crap in the pre-market? But hey, it traded very, very well. Or at least it ran up very well here. So
That was
so
that
nice
was
to get
actually,
ahead
I
of this.
think, somewhat predictable. I mean, it's part of the meme. Anything
Yeah,
you see with high short interest over 30% when you get in these meme cycles has potential
yeah,
to really go crazy. You got to be patient and wait for your entry on it because you can get a little bit hurt. Like I got my butt kicked a little bit on BBBY on Tuesday, being premature. Obviously, what I was looking for happened. My timing was off, and I was done by the time it did what it did. So
yeah,
you
yeah.
time it right. You got to be patient. You got to see what happens.
Yeah, timing is so important. So true on that. So today again, just don't know if you're gonna get anything today. It doesn't look like it's very active in the pre-market, so we'll skip on that one. So I see Raya, I see Mara on deck this morning. Let's see if they're doing anything fun. Right now, their volume is a little bit light. They're up a little bit, but they've been down the last couple of days after having a nice couple of months here, running up pretty nice. So I'm not sure what this means for them. I'm going to add Mara at least as a possible for now. Let's see if anything good is going to come out of that one. And then two good ones on here. We have AMC, well, not good ones, but popular ones. AMC, of course, which has been memeing a little bit, not as much as BBBY, but they've been on here. They're up 2.5, 996. And we also have Plug, which is, again, trying to get back up to 30 here, up 2.3. I do like Plug this morning. I like that bounce they're getting from selling down the last 3 days, really, although they're not red days, but sold down the last 3 days and or 2 days, and now possibly can get back up there. In AMC, we just have to wait for it. I mean, it's got volume now, very similar to BBBY. I'll add this to the list. The party's somewhat over on this, or completely over. But I would not be surprised if there's a small rally to get a scalping opportunity on BBBY and also AMC. Actually, AMC looks a little bit better today for a possible move up, as they're up 2.4 opposed to BBBY down 14%. So let's see what happens. Gapping
Yeah,
down. Yeah.
I'll echo what you said on this.
Mhm.
The Ryan Cohen thing, and I'm sorry, I every time I say it, I have to pause because I grew up with a kid named Ross Cohen, and I almost say his name every day instead of Ryan Cohen. Him declaring, now he doesn't have to sell. That's the thing. He filed a form saying he intends to sell his entire 7 point some odd million position stake. Doesn't mean he has to. That having been said, why would you do that unless it's going to happen? Because you just killed 14 to 20% of your profits if that you're not going to sell it. But yeah, I think you're right. I think the fund's probably over on this for now, unless the apes take it over and run the field, run down to the end zone.
Yeah, that's exactly it. You just never know. Even down here, down 14%. Anything is possible with our friends over at the Apes, Wall Street Bets, and all that good stuff. So I agree, Eric. Yeah, the volume is there, but volume sometimes in a stock like this doesn't mean it's going to trade well. I mean, you got 8.7, so that's huge volume, probably more than any stock in the pre-market right now, probably the highest. But that can trade sideways very easily especially with this one. So we'll see. And you really don't have short shares for short. You might get lucky and get in on there, but it's really for a long play that you're looking on this one, unless you're buying shares, which can be, I'm sure, very expensive for BBBY if you're trying to locate shorts with your broker. All right, that is what we have. Oh wait, hold on. Let's look at some of these low flow stuff. BWV, this is down 27%. This thing rallied huge yesterday. 1.6 million shares traded. How did it actually trade yesterday? 151. Is this a meme stock as well or no? Or
no, this is a biotech.
Yeah.
Monkeypox vaccine.
Gotcha. So again, is that a thing? I mean, I saw the numbers. I was looking at the numbers last week, and they're really low. So I don't know if this thing is. We'll see. We'll see what happens. But here, guys, they're down. I hate trading these biotech companies. They can be so tricky, especially the second day. So please be very, very careful. All right, what else we have here? We have BBBY on deck, of course. Kurt is on here. They are Kirkland's. This is down 10.6 after a couple of runs here. We actually seen this one before on our list, and again, it's a little funky to trade. Lower price stock. I have not traded it, but again, I'm not a fan of the way it actually trades. So I'm gonna keep it off my list. Let's look at Kohl's. Kohl's is on here today. They're down 8.6. Obviously, not good stuff happening this morning, as we can see here. This earnings, right, Norms?
Sorry, I blanked for just a moment there. But yeah, they had earnings this morning. This guy, RFG, put up this picture of this guy. We were talking about this in our chat yesterday amongst the mods. This guy that supposedly Financial Times. I don't understand this story. It's talking about a college student that made $130 million on the pop on BBBY.
Mm-hmm.
Where did a college student get $25 million to get 5 million shares of BBBY at $5.50 a share? That's what I don't quite understand. So I don't know if that's BS or not. It seems weird, and you couldn't pick a more interesting looking fellow.
or at least the
student loan. I love it. So good for him if he did. Yeah, I question the validity of that story.
Unless he made a bunch of money in crypto and switched it over, who knows? But
somebody said trust fund, baby. I just don't see somebody that was raised like that YOLOing $25 million on an almost bankrupt company.
Yeah, they don't. You'd be surprised. It's not like in the movies, it's not like those guys are. They actually
nobody looks like that.
They're actually taught better than that to deal with money.
What was that movie? It was a guy that was extremely, extremely pale. Was it like Powder or something? Was that it? Like maybe in the 90s? I can't remember any. Yeah, Powder.
Yeah,
that's what he's a ginger. He's a ginger powder, huh?
I don't remember what the movie was about, but I remember the movie and the guy and the powder.
I never saw it. He got hit by lightning. I just remember him being super pale.
Yeah. Have no idea what the movie was about.
Anyway, Kohl's, they had earnings.
Kohl's earnings dropping here 8.4. Kohl's could be good. We're gonna put that on there.
Their earnings were actually positive. I'm guessing their guidance was pretty horrible.
Yeah. So we'll see down 8.4 right now, 700,000. Codes can trade well when they have a catalyst like this, so definitely worth watching. Okay, and Mega low flow, that's down 3.7, no volume. We'll skip on that. APRN, which is Blue Apron here. Apron, they are down 3%, 287. Also not looking great. We'll skip on that as well. Elan, not Elon. This one is down at 3%, 200,000. Also looking horrible. Oh, this list is brutal. Macy's down at 2.5. Macy's could be interesting. Maybe not a main list, but maybe a possible. We'll throw up Macy's as a possible for the moment. And VRU, I know some people are trading this one, and here's why. The last couple of days, you've been just ripping insane here. This morning down 2%, 143,000. Again, the volume is not there. You have to look at this one at the market open, see if you get any traction. But right now, volume is not showing anything great. But it starts off like this. We see the last couple of days, pre-market doesn't do much, and then market opens, you get this crazy move here. Although we are very extended, I'll be shocked if we're going to put in another green day like we have in the last couple of days, right? Very extended at the moment on the daily. So, right, that's our list so far. Let's take a look at what you guys have on deck. Norm, anything you like this morning?
Still looking. Throw it to the room.
Yep, you got it, man. Let's take a look at what the chats are looking at YouTube and our friends over in our community. What do you guys like today? BBBY is on deck. Yes, that's in play right now. We have down 13% at the moment and just kind of hanging around between $20 there. So that's good. We'll see how that plays out. BJ, let's see, BJ's. Yeah, I have it in my secondary list. It's a nice pop today. If I don't find anything else better, yeah, that'll go on my list. That'll go on my list. But right now, let's see if we can find something a little bit better that can day trade nicer. SQ. Oh, I missed a few here. Let's look at yeah, SQ first. SQ this morning, which is block, they're pretty flat right now. I mean, they had a couple of moves here, but right now they're pretty flat. I don't see them in play as to add on my list. Maybe a little bit later, but right now they're pretty flat at the moment. Let's take a look at BABA today. Someone mentioned BABA very early on as well, and BABA alongside NEO, saying they did look good pre-market. This morning, BABA, they're pretty flat though. I like them gapping up or down for a move, either way. But right now they're pretty flat with light volume for the most part. So I think we have to wait a little bit. The only thing that looks good on it right now, or looks really good, is this daily level right that we're slamming against this 90-20. But outside of that, I think we have to just wait a little bit. Meta. Let's take a look at Meta today. Meta this morning, we are could be interesting. Possible. We'll come back to it. We'll give it a little more time. They got a little bit of volume right now, pretty much flat also, not doing a whole lot, but a good level on the daily here for a possible breakdown if that's in the cards for today. We'll see where that goes. DVN. No, not FVN. DVN. 86. Ooh, too light on volume. So no, this is a no for me. Devon Energy. We've seen this on our list before. Their pre-market could be pretty nasty, and they still could do something like they did yesterday here after an hour or so. They did get a move. Not my favorite stock. You have to wait for the market open on this one to see what it's going to do. You can't base anything on the pre-market because the pre-market is horrible. Their daily intraday action is not great. They had a couple of moves here, but the pre-market is not going to give you much. That's for sure. So just wait a little bit. Wait for the market open to see if that's going to do anything. LLY, what is this? And why? No good pre-market action right now. Pretty light in volume. So yeah, no. What else we have? FSLR. We'll do a few more, then we get over to our community events. Gapping up 2.3. Man, this stock, if you guys remember, we used to trade this a ton for like a very short period of time. For like 3 months, it was on fire. But we don't look at it as much. Last couple of days, we've been pushing higher here, going from the 65 all the way up to 119. But yeah, I don't see volume on this, guys. But this doesn't move with a whole lot of volume, but it's not going to create a price action that I'm going to like to trade. So I'm probably going to keep this one off my list. They don't get the volume that they used to. 2 more here, guys. CCL and APDN. Let's take a look, and we'll have time at the end because this list is not big today, so we can look at some more as we get through announcements. CCL, no volume on this thing. There's just nothing happening here at the moment. Very light. You need CCL to be like at 800,000, 1.5 million You're not seeing that right now. APDN also not looking great. Not a great daily. Oh, horrible daily. Yeah, no. Okay, let's get to our announcements for the rest of the week and next. If you go over to our website, click on the webinars, it's going to bring you over to everything that's happening for the next 2 weeks.
Dwight, you're kind of right with the My Pillow thing. I think we'll get something, but it could be up. It could be worse. All right. Every Monday we've got onboarding and technology with Carlos. It's 8 p.m. Eastern. Head over there. Regardless of membership category, you can do that even for the trial members. Tuesdays are dedicated to strategy. Next Tuesday, 8 p.m. Eastern, we've got Andrew. He is going to be talking about scrolling down. He's going to be talking about the art of trade management. And then Mike on the following week will be talking about finding the right strategy for yourself. Psychology is focused on Wednesday. Mike next week, 8 p.m. will be talking about creating a psychology journal. And then the following week, talking about overcoming fear. Thursday is for mentorship. So today you've got John at 11, Ed at 4, Thor at 8. StockTradingSimulator.com, our free web-based replay simulator. Don't forget about that. It's available 24 hours a day, 7 days a week. Of course, unless it's down for maintenance or something, but you can go there to hone your trading skills. And speaking of that trial membership, if you'd like to try out the room, you can go to barebulltraders.com, scroll down about halfway down the page, hit that join now on the intro. It is a one-time payment. And if you use a promo code PreMarket24, it will give you a discount. It is, like I said, not recurring. 1 week, give you a try in the room. If you would like to continue on, you can choose a different membership category. And if you'd like to choose that membership category as an elite annual membership, you can use the promo code READ50, get half off that elite annual membership and a free one-on-one coaching session with Dr. Kenneth Reed.
All right, thank you very much, Norm. So yeah, we're talking about My Pillow, and yeah, this is about right. This list is not
rough.
looking great. It's a little rough today. Someone asked why Wolf is not on our list. This is Joe from over on YouTube. For me personally, well, first of all, I thought the list would look a lot better.
It's getting a little bit better.
Yeah. I thought, and also it was the first one on our list we looked at this morning. And if I knew the list was going to look so bad, I would add it to the list. I didn't think we're going to go through this and only come out with 4 tickers, right? And 2 of those being meme stocks, right? So this list is not great. So yeah, there's room for Wolf today. It's getting better. It's not ideal for the way I trade, but you are getting some activity. You're up nicely 22% on this. So, you are going to get some move definitely in play. But yeah, it was the first one we looked at without seeing what we're going to end up with. Wolf can join this party of not so great tickers this morning, but as usual, guys, we'll get something. And we haven't looked at our usual suspects, which are, as Hater you're mentioning here, Apple, AMD, our friends, right? They're probably not doing much, probably pretty flat. But if the market moves, we're gonna get some movement out of these. But today, I'm gonna just put Apple and AMD on my secondary list. I am not gonna add them to my main one today. Let's see if these jokers can do something up here. Plug, BBY, MC, Coles, and Wolf. Let's see if they can get something going. RFG, you're giving us Tesla. Let's take a look at Tesla there. And pretty much similar to what AMD and other usual suspects are doing, right? And for those who are new, when we say usual suspects, are stocks that we look at almost every single day. And if the market is trending in any direction, up or down, these guys are going to move, right? AMD, NVIDIA, Apple, there's some Teslas, one that moves heavily with the overall market in the Q sector. So these stocks are going to give you some moves, even when they're not in play with their own individual catalysts, right? So yeah. All right, so we have Plug, BBBY, AMC, Coles, and Wolf. Let's do some levels for these, and then we can always refine tune this list and see what else is out there that we can look at. Here is Plug, guys. It is up 2.7. 2.7 this morning, 29.30 is the high of the pre-market, and we're just kind of been in this messy range for the most part. Your level of support down over around 28, the resistance area around a 29 or so, $30 there. We did break out a couple of days ago and then slam right back into this area of the highs and lows of the last 2 trading days. So towards the top, you're pretty much set. Looking towards the bottom here, I'm going to mark down 2650. So we'll mark that there, 2650. There you go. And we'll see where this goes. We'll see what happens with Plug. Again, has had an amazing run after the gap up a few weeks ago. Here's BBBY selling down a little bit at the moment. We are, as far as levels, high of the pre-market showing at 2145. So we'll throw a level there, and then we'll slam another level down at 1885, which is the low of the pre-market. Looks like we're about to test that or break down from that in a couple of moments here. We'll see what it does. As far as levels towards the bottom, we do have something at 17, and then highs and lows of the last 2 trading days are at the bottom here and all the way at the top, of course, with the previous day close. So you got plenty of stuff here on BBBY. Again, I think the party on this one is over. But anything is possible, as we know. Here is AMC. AMC, for the most part, 1 million shares traded. So they got a very active pre-market activity today. More active than we saw in the last couple of days, right? It seems that way, at least, right? So we'll see what happens. We'll see. Big drop yesterday, as many of the meme stocks are ending their party here until next time, or maybe just picking up more buyers. We'll see. Low of the pre-market down around 2110. But I do like this area right a little higher on 2177. I think that's worth marking down. You can still mark your 2110, which is your low of your pre-market. Where is that? It's actually right all the way down here at a 2110. So you can still mark that down. But between that, you have this level, which I think is a little bit more important. There's a lot more volume fighting on this level here. And you have your previous day close before you get down to your low of your pre-market at 2110 there. You also have 1975 again. I don't know if we're going to get there, but just in case, we're all set and ready to go. Let's take a look at Coles this morning. They are very active with 730,000 shares traded. Low of the pre-market sitting at 29.30. But you also want to mark down this area here at 30.90, right? A couple of touches on that this morning so far, which is kind of moving sideways. We'll see if this thing can do anything at the market open. Right now, it's not looking great as far as movement in the pre-market. Towards the bottom, we do have a great level, 2683, nice area of support there. Here as well, we gapped down, we found support there, and then we had the bounce, so that's good. And then that bounce comes straight to our 3090 area where we're seeing some resistance this morning and some support. Sorry, some resistance on the daily and some support this morning on that. So let's see where that takes us today. Towards the top, highs and lows up here, previous day close. In here is a little bit messy, so it's going to be a little bit tougher to find a recent daily level. I'm going to go with, I think 32.48. It's probably got the cleanest touches, the most touches on there, right? You got this day bouncing off that clearly on support, some resistance here. And then this one little doji date here, you have a kind of opening, closing right around that area. So worth marking down. So that is close for us. Let's see how the market open, how the volume is going to shift this one. Wolf popping up here, 22.5. Again, great gap up this morning. Low of the pre-market at 101.80. Your high is all the way up here at 105.49. So again, guys, this one moves quite a bit. Be very careful. You do not need to take a whole boatload of shares to make some good money on this one. So be very mindful. Towards the bottom, let's see here. What do we have? When was the last time we were up here? Okay, so here we go. Going to the left a little bit, April, May time frame. Clear level right there on the daily, 96.50. And if we push to the left, right over here, 92.89. So two pretty good levels below this gap up that we have here. And I think you're set there. Just want to get a level towards the top in case we do continue this run. We're looking at approximately around 110.20. I think it's a decent one. Obviously, you got some real big ones up here around 115, 120, but that's a stretch. Let's see what we could do to get out of this high and low range for the most part and see if any movement can happen there. All right, that is our list so far, guys. Plug, BBY, AMC, Coles, and Wolf. If you haven't done so already over on YouTube, smack that thumbs up. We appreciate it. We're sitting at 130, and our goal is 250 to 300. We would love to sit within that range if you're able to help us out. Appreciate it. We can't short BBBY. Yeah, it's a very tough stock to short. So yeah,
shortable right now in IB.
Oh, it is. We have something. Yeah, we have 150,000, so we got a couple of shorts there.
You got to remember, guys, sometimes the shares are there and available to short. The brokers, in order to protect themselves from losses, well, if something is there's a potential massive squeeze and they see risk profile problems on their end, they'll just turn the shorts off, even if they're there. It happens from time to time. So
they do that, and also I know some members that you see, Meg, they were complaining about their buying power not being able to use it. And what they do is they reduce how much you can buy. So you
they
can't
won't let you do it
buy
on
your
margin or reduced margin.
Right, you can't buy 80% of your buying power on BBBY. Right? They'll reduce it to like 25%, something very low. And again, this is just to protect them.
Which essentially is cash. What it would be what you have in your account.
Yeah, exactly. All right, guys. I think we are set here. Anything else that we might be missing? Let's look at our secondary list. We have AMD, we have Apple, Meta's on here, Macy's. Yeah, some good opportunities here. IonQ doesn't look too bad today. I think I'm gonna move IonQ up because they are moving well this morning, and they have done some pretty good stuff the last couple of days. Maybe that's gonna continue. As you mentioned, there's some good news on this one too. Nice positive catalyst. So let's see what it does. So IonQ is moving up. Then we have Cisco. Let's get rid of this here. Cisco today. Cisco, guys, if you like to trade this one, you could definitely in play is gapping up 5.3.
Excuse me.
I do not like this stock at all. I am horrible at trading it. I can't grasp the price action on this one is very funky. Reminds me a little bit of INTC. Another one that I don't care what it's doing. I just don't trade it well. So after you start trading, after a while, you start figuring out which stock you're just not good at, no matter what they're doing. Their price action is a little bit funky, and this is one of them. This is one of that. I will not add this to my list. I'm on my blacklist here, and we have BJ here as well. BJ's gapping up 7.5. This could be fun today. But we'll see what it does. And then Mara, which is I'm hoping it gets better, but it's not doing a whole lot. It probably should be off this list as well. Okay, anything else, guys, that we might have missed? I see some moderators coming in with their list already. We have Mike with Meta and SQ, and higher volume than normal. So see, Mike trades SQ quite a bit, so he knows here he is getting higher volume than normal, which is already at 500,000, right? So you kind of get to know these stocks when you trade them quite a bit. And then we have Thor looking at Kohl's, CSCO, Walmart, Bank of America, and then his secondary list, SCH, WY, CVS, AMC, and the Pivot Alert Bot today. So that is what we have there. Snap. Lucio is giving us Snap. What is Snap up to? I don't know. It seems flat right now. What's the volume on it? What's the volume on Snap? 458,000 is not a whole lot. We might need to wait for the market open. I know they had a nice little run here over the last couple of days. But again, this is not a lot of volume for Snap. They had one day where they had light volume, but there was a catalyst. It was memberships, right? I think they had broken 1 million in premium memberships. So, and what's a premium membership on Snap? You get extra filters. What is that? I mean, what's the
Do
benefit?
I look like a teenage girl to you?
You do not.
Why are you asking me?
Yeah, because I don't know, and you're the guy I go to, man. You're the guy that I go to for all this fun stuff. But yeah, so I don't know. They had that, and that kind of pushed them up. So I'm not sure how much it's gonna be, but again, we need more volume. Another dating joke coming.
Not a chance.
Love it. This guy coming in with
the
jokes. So I think we're set, guys. I think we have again, it's not a great list by any means, but we're hoping that it's going to get better. And it usually does. We'll have something that comes out of the woodworks. We'll have something that comes out on the scanners. And we'll see if we can develop something out of that. A few reminders this weekend, Norm. Big weekend. We have the
LA Meetup
webinar.
Yeah, keep an eye on Andrew's Twitter too, because I think we're going to have a contest. There was actually a BBT member, that purchased a ticket and said, hey, because of what BBT's done for me, I want to gift this to somebody.
Very nice.
So I think we're going to be doing that on Andrew's Twitter probably today. So keep an eye out there. If you're not already following it, be sure to follow @BearBullTraders. He is verified. Make sure he's got the blue check. You don't want there always idiot scammers out there. So make sure you follow the right one. And yeah, the meetup on Saturday, that should be great. It's actually more than just a meetup. It's a day of presentations, discussions, and learning.
Yeah, it's gonna be a whole lot of fun. All right, guys, let's go to our moderators list, and then we'll call it a day here. Let's resize this, and as I'm doing this, hit that thumbs up over on YouTube again. We appreciate it very much. It does help out the channel. You'd be surprised how much that small gesture does help us out here over on our BBT channel on YouTube. So thank you for that. And thank you for those that have already smacked that thumbs up. Appreciate you. Okay, here we go. Let's take a look here. Our moderators list this morning. Let me put that there. Okay, we are looking at I already mentioned Mike and Thor, but we'll read it again. Mike's looking at Meta, SQ, Thor, Kohl's, Cisco, Walmart, Bank of America. His secondary list is CHWY, CVS, AMC, and also the Pivot Alert bot here this morning. Jared is the light day of trading for me, reviewing BBBY/AMC, risk levels, CSCL, and market movers this morning. Megan does not have PayPal on her list today, but she does have SQ and Apple this morning. Peter, IPOs, GCT, PXMD, and no SPACs today so far. So that's what we have. We'll wait for Brian to throw his list together. We'll wait for Andrew to get rocking and rolling here, and we should have I'm not gonna say fun open, but an interesting one, because we don't know what's gonna really make the day today for us. I usually could tell, but today it can be anything. Peter's list: AMD, Apple, Kohl's, and secondary list to be determined as he continues to build his list there. Waiting for Andrew to pick from Brian's list. Yes, and Andrew just copied Brian's list. Yeah. All right, perfect, guys. Good to go. Anything that we're missing today? Do we have closing bell today? I don't know if we have the closing bell today.
It's Thursday, I believe.
Yeah, but I think we missed a couple of days. And again, I know Artie's working really hard.
But Andrew, sleep through them?
Probably. But I know Artie's working really hard. He got some exams coming up, so he's been really focused on that. So shout out to Artie for all the work he's putting in there. And I think we're set. See, Chris Strong at the moment. Let's see. Chris, CRIS. Yeah, penny stock though. Careful, guys.
Penny stock, guys.
Yeah, we don't trade this. We don't really focus on it. We don't have a strategy. We don't have an edge for this. We'll be honest with you. So we don't really care what it's doing. Not that we don't care, but it's not gonna help us. It's not gonna help us. All right, guys. Coming up on 9:15. Thank you so much over on YouTube. Last chance to hit that thumbs up. Appreciate you, and we will see you again today at 3:30 for the closing bell. If Artie's gonna be running that, and if not, we'll see you guys tomorrow at 8 a.m. And remember, we will be closing out the week, so look forward to seeing you there. Take care, guys.
Take care, guys. Trade safe.